the flight to quality in the bond trade, where rates usually get better when there's some kind of geopolitical event, was not the case because this was an oil supply chain event, at least how the bond market interpreted it. Banning our money supply because the Fed has been restricted. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop. Hey, it's KP coming to you live from Corona, California, and it is almost 1 a.m. This is what happens when you leave your desk for a couple weeks and playing catch up. And always the last thing I do is a video on Mondays and Thursdays before I head out to the airport tomorrow morning to go lobby on behalf of the industry with the California Mortgage Banker Association. And we'll be talking, of course, about the insurance crisis and so many other things. Have our board meeting on Wednesday, so lots going on. So looking forward to that. Okay, my video on Friday, if you didn't see it, the word was disintermediation. So I talked about how AI is going to disintermediate software, allegedly, and that's why a lot of software stocks have been selling off. All these SaaS model, I guess software companies out there, or AI is going to come in and just disrupt it all. By the way, shout out to James Kleiman from The Scoop. He posted a video that showed two of the guys at Thoma Bravo who kind of behind the deal talked about, how the whole conversation went when Ellie Mae was purchased and then sold to ICE Intercontinental Exchange. And it's really fascinating, especially knowing Ben Jackson and having met Jeff Sprecher a couple times over there. The guys at Thoma were very complimentary. It was pretty cool YouTube video to see how one of the biggest deals in our industry went down, and really very complimentary about the business at ICE. And so thought that was very interesting. Anyway, not that they're going to get disintermediated, but Iran got disintermediated, at least their leadership over the weekend. So, and by AI, by the way. So it's not just software that's at risk of being eliminated and taken out. It is horrendous, murderous, authoritarian theocracies that kill indiscriminately. And, I was at the Mortgage Collaborative Desert Disruption event last week. And I've been saying for a few years, especially since the Ukraine and Russia war conflict, how drones are my biggest fear. I think I'm not afraid, walk around panicking, but if there were to be attack on U.S. soil, I feel like drones are something AI driven, of course, many of the software that runs them. We're kind of vulnerable. And watching what goes on in Iran doesn't seem so far away, when you see just indiscriminate drones going after, hotels in Dubai. Why are they attacking, hotels, anyway. So seeing the drone show at the TMC event where, nice, cowboy boots and TMC logos and cool stuff like that. And then you see the murderous, potential of AI and drone warfare. It's a very crazy world. So disintermediation by AI took out leadership in Iran, and now we have a supply chain issue for oil. We all know that oil and gas makes the world go round. Yes, there are alternatives. Yes, Elon Musk has been banging the drum a lot in the last year that the sun is the biggest source of power and we need to tap into it. And he's got a couple companies to prove that he's trying to back that up. In the meantime, until we go that route, oil and gas is a big deal, and 1/5 of the world's oil goes through the Strait of Hormuz. And it is a supply disruption that could be short-lived. I did see that I saw some headline or clip or video or something that said that and I'm trying not to doom scroll. We had our senior management meeting, monthly meeting today, and it was a very long one, because we skipped February, and so we had a lot to talk about. So try not to doom scroll and try and be focused. And my oldest turned into a teenager yesterday, March 1st. She's 13. And so spent some time at the beach. And Anyway, just it was very interesting to see that oil supply shock with like Iran's navy causing blockades over time. I think like 8 of their 10 or 11 boats, or 8 of their major boats, were taken out from their navy. So maybe this supply chain will be short lived. I mean, you have to have commercial shipping not be in fear of drones coming after and attacking their ships. So a hard pause there right now, and they can go around the Cape of Africa, which costs billions more to ship, and all this kind of stuff. So, the flight to quality in the bond trade, where rates usually get better when there's some kind of geopolitical event, was not the case because this was an oil supply chain event, at least how the bond market interpreted it. So, one trading day made a huge difference. I am not a financial advisor. I'm not responsible for your losses, only your profits. And I'll tell you about a trade I've been doing pretty much every Friday for like 6 weeks, and it's paid off mostly, but I think this time should be a pretty decent one. So I'll get into that. Look, the 2-year Treasury yield got down to like 3.3 something. I'm looking on MBS Highway. Quick look at the charts. Don't worry, I'm not going to flip this camera on. But that usually is kind of like what is the bond market leading the Fed into cutting into. So we're at 350 to 375 on the Fed rate cut, which, by the way, in like 2 weeks, we have a Fed meeting, and 18th, so just a little over 2 weeks, with a dot plot, I believe. So pretty important, the summary of economic projections. So if the 2-year Treasury yield got down to what it did on Friday before a major geopolitical conflict, which hopefully is short-lived, 4 weeks is what the president is saying is to meet their objectives. So we'll see. Then the 2-year Treasury spiked up, but that gave a sign of where the bond market wants to go. Now that is because of slowing growth. We know GDP didn't come in where we thought it would. It was like 2.2. Many estimates were much higher. So, I mean, that's not recessionary. Below 2 is recessionary, over 2 is expansionary, but it's not as high as we thought. But we'll see the first 2 quarters this year with all the stimulus coming from one big, beautiful bill. All this stuff matters for mortgage rates, which is a huge driver. Our locks in February were up about 17% versus February of last year. And we had a humongous lock date today. So I know a lot of us out there this is not a brag thing. This is here's some insight, some data, so you guys can all kind of triangulate where we're going. March is here. And so it's spring purchase season. And, don't worry if you didn't have a great January, February funding wise, because they're not great months, not to mention pretty freaking cold. So it's hard to go out and traditionally see the purchase business in those months, especially when it's cold. So we'll get a jobs report Friday. Estimates range from 50,000 to 60,000. I've seen as high as 100,000, which we know in like a year and a half that will get revised back to like 20,000. But the bond market will do whatever it's going to do. Although the last jobs report, albeit a little delayed, was 130,000, and normally that would cause a spike in rates, had the opposite effect. So, the PPI last week, Producer Price Index on Friday, came in at 0.8, core, stripping out food and energy. But if you strip out food, energy, and trade, hat tip to the MBS highway crew, it was only up 0.3% month over month. So, maybe inflation is taming, maybe growth is slowing, short-lived supply chain shock with oil, which gives us a little spike in rates today, which cap markets people love it. Gives us a chance to not have like just going down rates in the market. So you have price renegotiations and pair-offs and blown out pipelines and all that stuff. And so, lots going on in the world. In one trading day, the 10-year Treasury spiked up. So we have a little breather and we're at 407, 408. Of course, that could all change, tomorrow. I just looked at the S&P futures. Stock market is selling off, going overnight now, going into tomorrow. Maybe bonds retrace back down towards 4%. Stocks, bonds. They usually move in, opposite directions. The only thing that I will say is When it comes to AI trade and supply chain, in high demand is Nvidia chips. We had their earnings report, not too long ago, and they're crushing it. And so it really says a lot about where all these AI projects we're all working on are going. And like some of the biggest competitors in our business who are gobbling up companies right and left, Nvidia just bought the only two U.S. like photonics companies, $2 billion each, just spent $4 billion just like that. I mean, that's $60 billion free cash flow, and why not? It protects their own supply chain, and they've got demand that seems to be for now 2 years out. So anyway, lots going on with the flow of money. I know it was a lot in 10 minutes, but rates matter, and so if we understand how everything is flowing around, and we kind of triangulate this stuff, watch the jobs report. Two big Fed speakers out in the morning. And, the stock market's been trading in a range. Oil spiked. That could be short-lived. Got rid of one of my long-dated options on Devon Energy today. Maybe I'll buy back in if oil price comes down. And the S&P, the stock market doesn't determine what the economy does, but it is a great barometer of how businesses are doing. Businesses are doing well, and our business and industry is doing well also. So it is spring. It is time to grind. It is time to serve our communities as the warm weather comes out and people go house hunting, which materializes into a contract, into a loan, into a funding. So the next 4 months are going to be super busy, and hopefully this Iran conflict does take just 4 weeks. We had some service members lose their life. We have civilians are losing their life. It's a bummer of a situation. And, as we talked about in our senior management today, sometimes you have to make investments that, you lose and for much bigger, longer term gain. And I'm not trying to equate, 4 service members' life to an AI investment. But the analogy is that, we have decided to go stabilize a region that has, 30,000 people died, at the hands of this regime just in the last couple, months. It's brutal. So hopefully we can stabilize that world and have peace through strength. I'll pray for it and pray that our service men and women who are working around the clock are going to make it home safe, and we'll get out of this thing with as little collateral damage as possible. Have a wonderful start to March, and I'll report back to you on Thursday and let you know how it went in Sacramento with the California Mortgage Banker Association as we're lobbying on behalf of all of you. What starts here changes the world from a regulatory standpoint. Have a good one. Cheers.
Hey, it's KP coming to you live from Newport Beach. Just wrapped up the Crispin commentary with Brian View, Kobe Hackler, and Christy Sukamet, and we are rolling into the weekend. The first week of March is over. Daylight saving time, moving the clock forward 2 a.m. Sunday morning after Saturday at midnight. So get ready. It's busy. I want to just get a quick little video out because the Friday engagement's not always the best, but I wanted to wait until after the jobs report and retail sales report. So we know that like our economy is consumer driven. Retail sales was pretty flat, and so that means that we're not really having recession fears, and we've had growing GDP. So that's generally good. If retail sales was taking off, that would be typically could be bad for inflation. However, what's been good for inflation for a little over a year has been low oil and gas prices, energy prices. And so we always strip out, food and energy on the core reading because they're volatile, but energy has not been volatile for over a year, but now it is. So volatility is back with Operation Epic Theory. Literally a week ago today, we had a 5 handle on the 30-year average fixed rate mortgage, so 5.95, call it. And it briefly touched for one day, locks were up, and then we started launching missiles in Iran, which, all opinions aside, the world's obviously going to be a better place once that operation is done. But in the meantime, it has reintroduced the volatility of oil and gas, which has spiked inflation fears. And so is it founded? We won't know until 1/5 of the world's oil and gas moves through the Strait of Hormuz. And it's a lot more expensive to take tankers around the Cape of Africa. And so oil future prices have spiked, and the price of oil kind of got a little close to 80, but it's kind of leveled off in the mid to low 70s. And the 10-year Treasury spiked this week. It got up to what was, before a floor, and now is acting as resistance. Couldn't get the 10-year Treasury quite above 4.15%. So it was, in the high 3 range a week ago, and then it's been kind of drifting higher, and now it's retraced back. So I just looked before filming this video. It's at 411, which we've been there in that range for many, many months. And the spreads between the 10-year Treasury and the 30-year fixed rate mortgage are better than they've been for the last couple of years. So rates are steady. So again, is this a ripple or a wave of higher energy inflation? Don't know. So, we'll see how this operation lasts. I do like that the administration is intentionally saying we're going to destroy the Iranian Navy, protect tankers, give them insurance, and try and get the flow of commercial shipping kicked back off again. But, it's a wild card, so we don't know. Nobody knows. And so we just have to sit back and watch. Meanwhile, it's spring purchase season. People are coming out of the woodworks. It's sunny, unseasonably sunny. For those on the West Coast, know that we've had unseasonably low snow, although the Hurt No More ski party is getting dumped on right now, so jealous of you. And hopefully the midwinter chairman's event for NBA, which unfortunately I can't attend, you guys get some snow there in Beaver Creek. But we know the Northeast has been getting walloped, so we're a great big nation with so many different geographic locations, but it will smooth out over the next 3 to 4 months of spring purchase season when people need a roof over their head, converging together that seasonal trend with lower rates. And rates are low, and the trend for inflation was lowering, and the trend for rates was lowering. And the jobs report that came out today was a big miss. So 50, 60,000, some reports even said as many as 100,000 jobs would be created. 92,000 jobs were lost. So that's highly deflationary. So stagflation has now entered the chat again, which we've heard many times, and everyone kind of was quiet about it. So people banging the drums and sounding alarms on like the worst case scenarios, just don't listen to it. Just things kind of have to smooth out over time. And so again, will this jobs report be a trend of weakening labor? We know it's been weakening, but it's not breaking. And so, we're not, recession talk will start, stagflation talk will start, but we need more data. And so we get a Fed meeting coming up, I believe on the 18th. So there will be a dot plot. And we'll get to see what they're thinking. And then, we have a couple more meetings, and then we have a new Fed chair. And so, again, like I've been saying, energy has been a nice, not volatile component to keep inflation low. And now it's volatile again, but it could be a ripple or a wave, depending on how long Operation Epic Fury lasts and whether they clear out the Strait of Hormuz. So those are things that are going on. Meanwhile, it's getting busier. Locks are up. This is going to be, for all intents and purposes, a very good month for the business. And, it's a lot of companies reported earnings in Q1 or Q4 earnings season reported in this quarter, and they're doing well. Companies are doing well generally. So steady as she goes. This is what a soft landing looks like. Maybe a little, bumpy, coming in, maybe some turbulence here and there, but no recession yet. And things are trending in the right direction. So have a wonderful weekend. I'll get this video out, and I'll get another video to you Monday from Park City. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.